It's Thursday, the 22nd of July, 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, the Prime Minister balks at reintroducing big handouts in the face of the latest COVID wave, as analysts forecast an economic contraction this quarter. Plus, the ASX surges as large caps have one of their best days in months. The oil sector is abuzz with takeover and merger talks, and Australia's wine exports get some good news from the United Kingdom. Our lead story today, the Prime Minister Scott Morrison has rejected JobKeeper as an option to help flailing economies as lockdowns start to bite and economists forecast negative growth during the September quarter. Mr Morrison said the JobKeeper scheme took 4 to 6 weeks to get going last year and it didn't suit the needs of 2021. He conceded the vaccine rollout was slower than he would have liked, but defended the government's management of the latest wave of coronavirus. Mr Morrison agreed that the economic impact of the new lockdowns would be significant, but he expected a turnaround in the December quarter, saying he had spoken to the Reserve Bank and they agreed with his view. Retail sales released yesterday showed just how quickly the economy can turn. Sales fell 1.8% during June as lockdowns and restrictions across the country forced stores to shut shop. The figure this month is likely to be even worse. Market analysts now believe the economy will go backwards this quarter. Already some big businesses are starting to lay off staff. Building group Boral yesterday said it had to stand down 630 workers in the Greater Sydney region and halt production at some concrete and asphalt plants because of the lockdowns. And the business community is getting increasingly antsy, with the chairs of Commonwealth Bank, Telstra and Zipco calling for a rethink on the virus. Until about 2 weeks ago, we were lauding the local economy for its V-shaped recovery. We can't say that anymore. We just have to hope it's not a W. That's boom, bust, and bust again. In overseas news, the Brexit deal between Europe and the United Kingdom is less than a year old, and Britain is already trying to overhaul trade rules for Northern Ireland. Prime Minister Boris Johnson wants freer movements of goods with Northern Ireland, but Brussels has said there will be no renegotiation, inflaming tensions between the governments. Coffee futures have hit a new 6.5-year high. Brazil is facing one of its worst droughts in almost a century, and its total harvest is likely to fall. Also, port delays in Colombia and Vietnam, two other major suppliers, are hurting exports. At the same time, demand around the world is surging as economies reopen and people visit cafes again. And Netflix, the world's largest streaming company, reported weak customer growth for the June quarter, triggering a 4% slump in its share price. Netflix did well during the pandemic, but the reopening of communities and movie theatres and lifting of restrictions has clouded its outlook. Other companies to report over the past 24 hours on Wall Street include telco Verizon, United Airlines and Coca-Cola. All did better than expected. Locally, the ASX closed up 0.8% yesterday to finish at 7,309 points, reversing Tuesday's losses. It was a pretty good day across the board, led by healthcare and financial stocks. Only industrials and technology stocks went backwards. All the top 10 stocks gained ground. That's unusual. Wesfarmers was up more than 2%, while BHP, CSL, National Australia Bank, ANZ, Macquarie, Woolworths and Rio Tinto all jumped more than 1%. The number of COVID cases across the country rose again yesterday. New South Wales recorded 110 new cases, and 43 of them were in the community while infectious. More than half the new cases were unlinked. The infectious rate is the highest so far, and that's the figure the New South Wales government wants to reduce through hard lockdowns. The Victorian and South Australian governments committed to big support packages after reporting 22 and 1 new cases of coronavirus respectively. The oil and gas sector is abuzz with takeover speculation. With carbon neutrality a goal of some of the biggest global players, the local companies need to decide what to do with their fossil fuel assets. BHP yesterday remained tight-lipped about a Bloomberg report that said it was interested in selling its $15 billion oil and gas portfolio. For almost a decade, it's been speculated that Woodside could be interested in the asset. On Tuesday, Santos said it had made a bid for Oil Search, which was rejected, but the potential for a deal remains live. And both Woodside and Oil Search are looking for new CEOs. There'll be plenty of action in that part of the market over the next few years. Australian wine sales to China fell to just $13 million in the first 6 months of this year, down from almost $500 million 12 months earlier. The Wine Australia figures show the impact of the tariffs placed on the local drop by Beijing late last year. For the full financial year, wine exports were down 10% to $2.56 billion, with higher sales to the United Kingdom offsetting some of the damage from China. And bring on the Olympics. In 2032, Brisbane has officially won the right to host the Summer Olympic and Paralympic Games. The vote in Tokyo last night was uncontested, and Brizzy will do a cracking job, no doubt. If well managed, it will trigger huge amounts of infrastructure spending that will have long-term benefits and boost the region's tourism credentials globally. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. And if you'd like more detail and more stories, search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking to journalist Latika Burke in London about the lifting of COVID restrictions. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.